So, the AI revolution is in full swing, right? And it feels like all the attention, all the money is flowing to just one company. But what if the obvious bet is actually the wrong one? And that's exactly the question Cathie Wood over at Ark Invest is asking. She's making this really bold, contrarian bet that just flies in the face of what everyone else is saying. So let's dive in and really unpack her thinking here. Okay, first things first, you have to acknowledge the undisputed king of AI. Nvidia. I mean, their run has been absolutely incredible. And what's really important to get is that Cathie Wood herself was an early believer, and she did very, very well with it. So look, this isn't about saying Nvidia is suddenly a bad company. Not at all. This whole pivot is about strategy. Her argument is that after a stock has a run that explosive, maybe, just maybe, the biggest opportunities have moved on to somewhere else, somewhere the rest of the market isn't looking at. Now, this is where it gets really, really interesting. Cathie Wood believes that we're on the verge of a massive and almost totally unexpected economic shift, one that turns the whole inflation debate completely upside down. You know, while everyone has been leisure-focused on prices going up, her idea is that powerful technologies, especially AI, are going to drive down the cost of making things so much and so fast that prices will actually start to fall, consistently. And this right here, this slide just lays out the core conflict. On one side, you've got the mainstream view that inflation is sticky, it's here to stay. And on the other, you've got Wood's view, which says, yeah, the supply shocks were temporary, but the deflationary force of technology, that's permanent, and it's speeding up.
So why does any of this matter for investing? Well, in a world where prices are falling, central banks have to react. They're pretty much forced to cut interest rates to get the economy going. All that new money, all that new liquidity, it has to go somewhere. And it usually floods into assets with the highest potential for growth. We're talking innovative, emerging tech companies.
Okay, so let's play this out. If this deflationary future she's talking about actually happens, are today's tech giants, the ones that seem completely invincible, are they really as safe as we think they are? Okay, get a load of these numbers. They really paint a picture. Nvidia is trading at an absolutely breathtaking 25 times its annual sales. Now, compare that to Tesla, which Wood sees as a huge AI play, and it's trading at a much, much lower 6 times its earnings. That's a massive gap in how the market is pricing these two companies. And hey, it's not just about that sky-high price tag. Wood sees some very real risks on the horizon. The chip industry is famous for being cyclical. Today's shortage can become tomorrow's glut in a heartbeat. At the same time, Nvidia's biggest customers are all racing to build their own chips. And on top of all that, the AI models themselves are getting way more efficient, which could mean they need less hardware over time. And this kind of risk isn't just for Nvidia. A core promise of AI is that it can cut out the middleman, a process called disintermediation. Just imagine asking your AI to find the best pair of shoes for you, and it buys them directly from the factory, completely bypassing Google Search and Amazon. That could fundamentally wreck some of the biggest business models in the world. All right, so if the big bet isn't on the company making the chips, then where is it? Well, according to this thesis, the real long-term advantage in the age of AI isn't the hardware at all. It's something way harder to get your hands on: proprietary data. And this analogy, man, it just hits the nail on the head. See, any company can go out and buy chips from Nvidia. That's the generic online recipe. Anyone can get it. But what they can't buy are the billions and billions of real-world driving miles that Tesla's fleet has collected. That is the secret family recipe book. It's the one unique ingredient that makes their AI almost impossible for anyone else to copy. So at the end of the day, here's what it all boils down to. The search is on for companies that have these 3 key things: a unique set of data nobody else has, a way to get their product to millions of people, and leaders who get AI at their core, who built the company around it from day one. And look, if this whole thesis is right, the prize we're talking about isn't just a little bit of growth. We are talking about a market opportunity so unbelievably vast, it could completely redefine the entire global economy. $10 trillion. Just let that sink in for a second. That's the potential annual revenue that Ark Invest's research is projecting for autonomous taxi networks by the year 2030. We're talking about an entirely new market being built from the ground up, and whoever wins it could become one of the most valuable companies in history. So how do you get there? Well, here's the game plan. It all starts with that data advantage. That unique data lets them build a better, safer, autonomous system. And the company that provides the safest, most efficient ride is probably going to dominate the market. It's a classic winner-take-most scenario. So it really all comes down to this one fundamental question. In this new AI gold rush, have we been so focused on the shovels, the computer chips, that we're completely missing the real prize, the actual gold itself, the data? That is the heart of this entire contrarian bet. By the way, you can find the original source for this analysis linked in the description. And for more insights like this, be sure to follow, like, and share What Bitcoin Taught Me. And follow us on Twitter/X, Nostr, Blue Sky, Threads, Instagram, Facebook, LinkedIn, Spotify, and now on our